citizens were not called good or bad according to their public conduct. Because of that respect, they were all equally corrupt. But those that were wealthiest and most able to inflict harm were considered good because they defended the existing state of affairs. Sallust, Roman historian and politician. Good morning, everybody, or should I say late afternoon. It's your favorite aspiring revolutionary here, a wandering author, reminding you that we are all the authors of our own lives. As always, my message remains the same: spend less, live more, earn your freedom with frugality. And today we will be returning to the Great Recession. And we're going to be kind of analyzing some research that was released by a research team out of Berkeley at the Institute for Research on Labor and Employment. We've talked about the Great Recession a little bit so far, and basically we know that mortgage-backed securities were the catalyst, and whenever home prices began to drop globally, it precipitated a financial crisis that led to what amounts to a bank run, and we had large financial institutions fail. But this research team is actually pretty interesting because they take an alternative perspective from the mainstream one. And let's start by just going over what the Federal Deposit Insurance Corporation defines predatory lending as. So according to the FDIC, the thing that protects the money in your bank account if your bank fails, they say that imposing unfair and abusive loan terms on borrowers, often through aggressive sales tactics, taking advantage of borrowers' lack of understanding of complicated transactions, and outright deception, qualifies as predatory lending. Now, the reason that matters is because lenders actually profit from predatory lending, and that's that's what these researchers argue is one of the main things that caused it. In fact, they believe that there's plenty of evidence that shows financial institutions were actively seeking out these risky investments. They weren't just victims of the market or whatever, non-accusatory frame the mainstream media has put on them for so long. So how exactly do people or lenders profit from predatory lending? First off, one, they funnel borrowers into more expensive loans than the ones they might be able to qualify for otherwise. That's pretty simple. Basically, they charge them more than what they should be charging them. And two, it increases the odds that a borrower will default. They can lend to non-creditworthy people, rake those people for fees, and then whenever they default, they simply repossess the house. Is there an incentive for financial negligence? Malfeasance is the word that the researchers use. Yeah, I think so. Unsurprisingly, most evidence indicate this is a funny quote from Simpson et al. He's a different researcher. He says, unsurprisingly, most evidence indeed suggests that actors are more likely to engage in white-collar crime when they believe they are unlikely to be caught, or, if caught, unlikely to be punished. And if you are a bank in the United States, you darn know well that there are no punishments for you. Anyways, vertical integration or monopolization of finance also encouraged fraud. Between 2003 and 2004, the conventional market for mortgages shrank from 2.7 trillion to 1.4 trillion. And I've got a little pupster right here. So I apologize if I'm slightly distracted. By 2007, 70% of new loan originations were non-conforming. Now, non-conforming are ones that don't meet Fannie Mae and Freddie Mac, the government regulator standards, so they can't be backed by government-backed mortgages like USDA or FHA. Now, again, let's say, so 70% of them by 2007, and in 2003, only 4 years earlier, only 30% of them were non-conforming. They actually interview several, and I'll drop the link to this research down in the description if you guys want to go through it. It's a 60-page document. It's really pretty long, but there is a quote where they're interviewing an unnamed subprime mortgage specialist from AmeriQuest Mortgage who says, every closing we had really was a bait and switch because you could never get borrowers to the table if you were honest. Man, I am glad that we've got people like that guiding the American economy. Later on, the comptroller of the state of New York issued a complaint that detailed how Merrill Lynch, the financial institution, instructed their subsidiary Onnit Mortgage Solutions to, and I quote, weaken its underwriting standards to originate more stated income loans. Those are those no income, no job ninja loans that you've probably heard about, especially if you watch like The Big Short, so that they could increase the volume of mortgages for repackaging and enhance profitability. Profits. So later on, these researchers, they look at filings with the Justice Department and the Security and Exchange Commissions, and they discover that the Bank of America was selling mortgages that 40% of these mortgage-backed securities contained mortgages that did not even meet their own underwriting standards. And I mean 40% of the mortgages in the securities they were selling. So they were just being willfully negligent. Very, very. Credit Suisse, I think that's how you pronounce it, also sold mortgage-backed securities, and they did something that I think is even funnier. They told buyers they could take federally backed student loans. Oh yeah. Good thing the investors are the one who are on the hook for the losses, right? Anyways, towards the conclusion of this research article, the researchers really show some wit. Here's another good quote. Our findings suggest that regulators should pay attention to understanding business models. That is, how firms actually make money. Yeah, the people who regulate the economy should understand what they're regulating. That is a brilliant insight from this research team. But their research is actually pretty brilliant. Again, I'll drop the link below. You can check it out. The conventional narrative is that the housing industry collapsed due to perverse incentives. But the Institute for Research on Labor and Employment's research indicates that firms actually sought these out in pursuit of profit. Basically, there wasn't as much profit in following the letter of the law and being responsible as there was as being fraudulent and going hard. So 32 out of the 60 largest lenders ended up settling for predatory lending suits following the housing market's collapse. Here's another great quote from one of the researchers. The fact that the group of experts whose job it is to make sense of the direction of the economy were more or less blinded by their assumptions about how that reality works is a sobering result. Sobering indeed. Here's another little stat. We're almost finished with talking about this stuff. So from the 80s to the 2000s, this is about the drop in profit for regular financial activities. Non-interest income grew from 29.9% to 47.1% of total income, mainly due to fees for securitizing and servicing mortgage and credit card debt. So people were benefiting from this. And then we'll end by talking a little bit about how this impacted actual homeowners. There's an entire 60-page or similar length document that goes into research on the actual impacts of this crisis on the American people. But here's some highlights. From 2007 to 2011, median household income fell from $57,000 to $52,000. That's like almost a 10% drop in income over a pretty sustained period. So American families were bringing home less as a result of the malfeasance of those up top. And when housing prices stopped rising, homeowners who were sold mortgages, adjustable rate mortgages using predatory tactics, were no longer able to refinance their mortgages, and that caused them to default, which took more money out of their pockets. But that's really all I've got for you guys today. So the mainstream narrative is just that the housing crisis was like the natural consequence of stuff. And these researchers argue that basically greed motivated it, and that these institutions were willfully engaging in fraudulent activities, and that fraud, like outright fraud, not just being a little too risky, was one of the primary drivers, and that this stuff directly affected American people. I am definitely still a little sick. It's raining, as you guys can tell. I will be working here in Alabama for like the next week or so. Hopefully I can get out at least on the water a little bit more. I really enjoy doing that. I want to talk sometime this week about why Americans are dying from despair, the deaths of despair, and actually look at like the research on some of that stuff. suffice to say, it's similar reasons as to what caused the Great Recession. Just a poorly designed economy that is managed by people who really are mostly guided by self-interest. It has real consequences, and it's affected a lot of the families throughout the country already. And hopefully, what I'm doing can do something, although I'm sure that whatever it is will be relatively negligible. Eventually, I want to start talking about the history of monopoly, concentrated wealth and power in the United States, and antitrust laws, stuff like that. There's definitely some great content that we can go over about these topics, but it's really all I've got for you guys today. Tomorrow, we're going to talk about Stoicism again, and I've got to be planning my major trip up to Maine. It's probably going to be my last major trip this year. It's a lot of fun traveling all the time, but honestly, it's tiring and it's hard. Like, the logistics of it all is very difficult. And I mean, I think mainly I'm still just sick right now a little bit, but I have been enjoying myself quite a bit. I need to trim my beard a little bit though. Anyways, that's all I've got for you guys today. This is Wandering Author, reminding you that we are all the authors of our own lives. As always, my message remains the same: spend less, live more, earn your freedom with frugality. What are you guys doing to inspire, uplift, and empower your community today? Because this world isn't changing unless we all do our part. You can count on me to do mine daily. Like, share, and subscribe, please, if you guys actually enjoy this content. I put several hours into it each day. Between this and like the actual work that I have to do to support what little bills I have, I spend most every single day busy all day long. So any bit of support that you guys give me, and every bit that you have given me already, is much appreciated. Until next time, I love you guys.